I hope you're doing well. Got a story I want to go over, and it's about the FDIC. It's about Bank of America, and I think it is very, very important. And the reason why is because we're in a moment of time where I've said this before. You just saw the first wave of the banking collapse this first quarter of the year. I said there's going to be a calm before the storm, and then we're going to see it pick up in the fall. Now, today we're going to talk about FDIC and Bank of America, but um, what was it, Pac West? I talked to you guys about this probably 4 months ago. Pac West was having issues, and they have now succumbed, and obviously pending voter shareholder vote to be bought out by Bank of California. Now these consolidations are going to continue happening, and was it Pac West was around the 50th or 54th largest bank in the country. Bank of California is like the 154th largest bank in the country. And what people need to realize is that this consolidation actually is, well, it's always bad, but just because a bank like Bank of California is taking over Pac West, it doesn't mean that the Bank of California is strong. A lot of these banks have very serious leverage in the real estate space. Not only is coming out that the FDIC, and this is one headline out of Wall Street Journal, FDIC scolds banks for missing deposit data. Um, the banks have been failing for years. There's a leaked video from the FDIC. I don't know if you guys have seen it. I'll try and grab it for another video later today or tomorrow. And what it is they are talking back in November, a private meeting in the FDIC boardroom, and they're talking about how they need to keep the truth, the facts of the banking system collapse out of the public's eye. They do not want the public knowing. And they literally said, and I quote, if they knew this, they would panic. And that's not what we want. The Federal Reserve came out with information this last spring after the first, four banks had failed in the springtime. I said, yeah, we got contacted by around 723 banks in September that said that they were failing. And they never said anything to you. And this kind of stuff goes widely unreported. I talked about it, and I've been pleading with people like, you need to diversify. You need to understand, because there will be a point when the entire banking system falls, collapses. And what blows me away is that people just don't believe that it can happen. Am I saying it's going to happen tomorrow? No, but it will. And there's only so much insurance out there that the government has set up. And if the government was to completely backstop all of the deposits, because like you saw in the news, when these banks started to fail last spring, they just came out and said most of these accounts are uninsurable. We don't insure these. But the government, the White House came out and said, "Hey, we're gonna take care of it. Okay, we're just gonna make it work." Shortly thereafter, the FDIC said, "We're broke. We're insolvent, and we need some help." And so what they did is they started to raise fees, the insurance fees that banks have to pay to be insured by FDIC, and they raised them on the big banks. And they said they wouldn't do it on the small ones. Why? Because the small ones are collapsing. They cannot physically afford. They do not have the margins to afford the insurance. And this is literally being told to you straightforward, right out in the open. So, what are some things you can do immediately if you have money accounts that are uninsured and you want them insured? Make sure that your accounts are insured. Also, have the proper amounts in there. Don't have over $250,000 in one insured bank account. That's it. Because there's a day when this collapse happens, and I'm telling you what, God's been warning about this through his prophets for like 12 years. So I don't know when it's going to happen. Do I believe it's coming sooner than later? Absolutely. Do I believe you're going to see the throes of it later this year? No. You want to know why? Because it's already started. It already started. It's going to get worse this fall. It already started this spring. And so as I go through this story, please think about, and we're going to talk about FDIC and we're going to talk about Bank of America. And I believe where there's smoke, there's fire. And I believe almost like it's prophetic that Bank of America, simply by its name, as America falls, that Bank of America will fall. All right. And just check this out. The first story I'm going to go over: US FDIC presses banks to fix, quote, inaccurate statements as new fee looms. It says here, the U.S. Federal Deposit Insurance Corporation, or FDIC, on Monday told banks to fix financial statements that incorrectly reduced uninsured deposits. Restatements that preceded a proposal special fee tied to the size of those deposits. All right. Why would a bank want to improperly, and I'm telling you, this is not a mistake. This was done on purpose. And it's not just Bank of America. However, Bank of America is one of the largest that did this. Okay. Why would a bank want to incorrectly reduce uninsured deposits? Think about this. They don't want you knowing how at risk your funds are, and they don't want you knowing how at risk the bank is. Why? You simply wouldn't use them. Now, Bank of America just got fined for 3 different violations, that's not including this one, okay? So I'm gonna go over that too. So I'm telling you, where there's smoke, there's fire. The warning and revisions came as banks have complained about a fee the FDIC plans to impose mainly on large firms to recover its losses from the failures of Silicon Valley Bank and others. The banks could owe billions of dollars. That special fee, which the FDIC proposed in May, would be assessed based on their uninsured deposits at the end of 2022. So the Bank of America is straight up lying. Oh, oh, you mean you wanted all the information? Because they don't want to pay the insurance. So now think about this. They're literally lying to the FDIC to get away with being able to pay less on their insurance premium so that when you turn around and the bank fails and you go, oh, I want my account insured, I want my money, Bank of America goes, and the FDIC says, sorry, your account's not insured. Bank of America didn't even say pretty much your money existed. Think about how massive that is. If that isn't a clarion call to pull your money out of Bank of America, I don't know what is. I don't know what is. We're going to get into more reasons. That special fee, which the FDIC proposed in May, would be assessed based on their uninsured deposits at the end of 2022. Like I said, the regulator said some banks were not reporting estimated uninsured deposits in accordance with the instructions. It said a July 6 report by S&P Global noted that 55 banks restated their fourth quarter uninsured deposits. The FDIC reports more than twice the norm, because I guess it's just it's normal for banks to just lie, for banks to rip you off. I mean, we all get that, right? Makes sense. It says here a quote, if your institution incorrectly reduced the amount of reported uninsured deposits, for example, to reflect collateralization of deposits by pledged assets or by excluding intercompany deposit balances of subsidiaries, those reports are inaccurate, the regulator said. Bank of America goes on to say, revised its uninsured deposits reported to the FDIC downward in May by 13.8% to $783 billion to remove intra-bank accounts as uninsured deposits, the S&P report said. Earlier this year, we identified certain internal or intra-bank accounts that shouldn't have been reported, Bank of America spokesperson Bill Howden says. The bank does not plan to change the latest number it has reported to the FDIC. However, the FDIC is saying to fix this right now. So the bank's going, no, we're not going to change it. No, we don't believe that's the case. We do not believe those should be insured. And the FDIC is, you better fix this because we need our money. The FDIC is straight up insolvent right now, just like so many other government programs. This is stuff to be alarmed about. All right. Should you panic? No, never. You don't have to panic when you have knowledge and understanding. You just beat the crowd to the grocery store. You just beat the crowd to the bank when everybody's racing, like the movie It's a Wonderful Life, or the footage, the videos or the photos of the Great Depression, people banging on the doors of their bank like, we need our money out right now. And they're like, sorry, stock market's crashed. Everything's done. You're too late. You don't have to panic when you have understanding. You're like, oh, I got $500,000. I know people like, I got $500,000 in one account. Like, are you nuts? It's not insured. Oh no, it can't happen to me. It can't happen to me. As a firefighter, trust me, I hear that all the time. Like, I never thought it would happen to me. I didn't think it was my family. I didn't think it was my car that would get hit, sideswiped. I see that stuff on TV. I see it every once in a while. Oh, wow, it's cool. And now it's me. It just absolutely blows my mind. Now, check this out. Here's another story out of bizjournals.com. It's entitled, Why Bank of America Cut Its Uninsured Deposit Total by 125 billion. Let me see. Wait, this story. No, this story got cut off. Sorry, but it talks about why they believe it's like propaganda that Bank of America, in my opinion, is putting out. Um, they're trying to tell you it's okay. It's okay that we underestimate or understate the amount of money that we should be paying insurance premiums on. Here's a story out of Bloomberg, and it's entitled, and I'm just going to briefly go over this. FDIC warns banks over errors in reporting uninsured deposits. Dozens of banks revise data disclosed in regulatory filings. Lenders facing increased scrutiny after recent bank failures. Um, Thank you, Outamudden one for the super chat. I really appreciate it. Says the FDIC said that some banks incorrectly reported. Like I'm saying, it's hitting all of the news wires right now. Check this out. This is the fines that Bank of America just hit. And if Bank of America is willing to do this kind of stuff to you, similar to when Wells Fargo just made up a bunch of fake accounts, right, to show how big they are, think about what else is going on behind the scenes at Bank of America. It says CFPB fines Bank of America and what it means for you. The Consumer Financial Protection Bureau on July 11th fined Bank of America for 3 types of transgressions against its customers, each costing consumers money and time. We've seen similar transgressions at many other banks over the years, and we are likely to see more in the future. So now we all know that it's a cost of doing business. Like there are banks that will do illegal things, and they're like, hey, it doesn't matter. The fine is nothing compared to how much we made, right? So here I'm going to give you an example of 3 different types of things that Bank of America did illegally, to the point where it's super easy. A government regulator comes in and goes, "Yeah, fine, fine, fine," and helps me, justify my job and makes us all money. And Bank of America's like, "Sweet, we don't care. Like, we just ripped off the American public for so much more. Cool." It's just like an inside club, right? This is why we have to get out of debt. This is why we need to become lenders. We need to become the lenders, not the banks. We need to take the power back, the money system back. And I know it sounds crazy, but if we could get this message out to everybody, we'll completely flip the system on its head. Um, okay, so here are the 3 transgressions. First one, the first B of A transaction cited by the CFPB involved non-sufficient funds, or NSF fees. An NSF fee occurs when there's not enough in an account to cover a transaction. Banks will typically decline a transaction because of the insufficient funds and charge the customer an NSF fee. The problem with what B of A did wasn't that it charged an NSF fee, but that it charged multiple NSF fees for the same transaction. B of A's NSF fee was $35 when this charge was unfairly applied multiple times. The total fee amount quickly rose to a burdensome level. Okay. So they just don't mind just nailing you, right? Just taking your money out of your account. Oh, sorry, you have non-sufficient funds. Oh, did it again. And they're just taking your money. And I will bet the amount of money that they took out of your account for NSF fees paled in comparison to the fine they paid. Type 1 if you agree with me. Type 1 if you think that Bank of America ripped you off more than the government came out and just took a little bit out of their account. Type 2 if you think, no, the government took all the money back. And let me ask you this. If the government took all the money back, they said, hey, you robbed all these people. We have the numbers right here. It's pretty easy to search this stuff. We're going to give it back to everybody. No, very small bits will ever make it back to the person that was robbed. As a matter of fact, what will happen is B of A will be forced to tell all of its account holders and of all of this, and that they have the ability to get their stuff back, but they have to jump through hoops to get it. And it's in the fine print of some new disclosure that you'll never read. It's sent out through an email. Isn't that insane? All right. Here's the second one. This is the second B of A transgression cited by the CFPB was the withholding of promised credit card account balances or bonuses. According to CFPB, B of A failed to honor rewards promises for consumers who submitted in person or over the phone applications. This is another common problem at banks. Bank bonus offers have requirements that customers must satisfy to qualify for the bonus. Sometimes it's the customer who fails to qualify for the bonus. Other times, it's the bank wrongly claims that the requirements were not met. So that happens all the time. Let me know. Has that happened to you? You feel that you were hit all those requirements, you get the bonus, like, you open up a checking account and you put this much in deposits for this amount of time, and you get a check for X amount, $100, $200, and you don't get it. And they say, oh, sorry, you move money in, then you move money out. And they try and figure out ways of ripping you off. And think about it. If Bank of America is doing this stuff right out here in the open public, and then the FDIC is saying, hey, you are literally lying to us about the amount of uninsured deposits you have, which just so you can get out of paying a high insurance premium with us, then what's going to happen when their bank fails? And I believe they are going to fail. That's not financial advice. I'm telling you, this bank failure that's coming is going to be widespread. And there will be a big bank involved in this. And I believe it'll shock people. And I believe where there's smoke, there's fire. Here's the third transgression. The third of BofA's transgressions cited by the CFPB was the opening of credit card accounts without customers' knowledge or authorization. Has this happened to you? This is absolutely insane to me. The opening of a credit card account without your authorization. As the CFPB described, I think this is one of the craziest, most egregious acts that a bank could do. And it just seems like they just get glossed over. They get glossed over. Well, right now, we're in the middle, the eye of the storm of a banking collapse, a nationwide bank collapse, akin to what happened in 1929 during the crash of 1929, the bank failures. Consumers were charged unjustified fees, suffering negative effects to their credit profiles, and had to spend time correcting errors. I've actually had this happen where my credit got hit and it was nothing of my fault. Contact the bank and I, sorry, you got to deal with it. Like, are you freaking kidding me? You've now cost me money and time. Not only the time and money it takes to go and fix it, but also the money on a better, because I was out there just crushing it with the mortgages, mortgage after mortgage after mortgage on house flipping stuff. And I'm sitting here going, wait, there's just no, you know, I don't want to talk to somebody from India. I want to talk to somebody in America right now, not on some stupid call center. And I want you to fix this, take this off. I didn't do it. And they're like, sorry, it's nothing we can do. Or is there nothing you can do or nothing you want to do? It says they had these negative effects to their credit profiles and had to spend time correcting the errors. The unauthorized opening of accounts was the root of the Wells Fargo scandal in previous years. To protect yourself against unauthorized account openings, regularly check your credit reports from each of these 3 credit bureaus. That's great and all, but the whole point, the biggest point here is that I believe that you are seeing Bank of America rob people. And you are seeing the proof because they're being fined for robbing people, breaking the law. And they are lying to the FDIC about your accounts, your money that's not insured so that they could pay less premiums. And then I know what they're thinking. Well, if the banking system falls, if we fall, that means everyone else is falling. So we'll just go to the government and threaten them, just like we did in 2007, 2008, and says, if you don't bail us out, there'll be blood in the streets tomorrow because people will be rioting, just like the Great Depression. That's what they're holding on to. But believe me when I say I believe this time is different. This is not 1929. And I believe there are a group of people that are very evil. They want this to happen because just like Jamie Dimon and Chase Bank made so much money, a windfall, being able to take over that last big bank that failed. Was it Silicon Valley Bank or one of them? These big banks are just fiending for the day that you're losing your money and the banks are going under so that they could buy the good assets, separate them from the bad, put the bad ones in your retirement account. Don't worry, no one will see it because you don't truly know the sheer amount of money you could make if people weren't skimming off of your retirement savings through fees and through brokerage fees, all kinds of crazy stuff. And it's just insane to me because the American people are slaves to debt and they're slaves to these banks that just chip away at you. And now there's the government that's coming out with this this cryptocurrency. It's not a cryptocurrency, it's the digital currency that will be taxed microtransactions like crazy. And I want people to understand how serious this is. So you have to take these matters in your own hands. You have to stop getting robbed. How do you do that? Stop going into debt. Get out of debt. Ladies and gentlemen, I hope you have a great day. Thank you for watching. The Economic Ninja is out.